Hey everyone, it's Michael and welcome back to Boxmining. So today I've got a really packed episode for you guys because a lot's happening on the political front that's going to have a drastic consequence to cryptocurrencies. And we have both good and bad because we have two major factors approaching Chinese New Year, which has always been bad for crypto, but also we have kind of political uncertainty, which gives a lot of value to cryptocurrencies as well. And this is why it is the most pivotal time right now. It's the most kind of scary time with huge forces on both sides battling each other out and potentially causing major price changes upcoming in the coming months for cryptocurrencies. Well, not only is that being discussed today, I'm throwing everything in the bag as well. So make sure you stay till the end because we're going to have one of the most realistic predictions as to what's going to happen to cryptocurrency prices this year. And also, I'm going to tell you how I'm going to deal with all that uncertainty as well, my portfolio analysis. So that's all coming in today's episode. And if guys, of course, everything covered here is my personal opinion, not financial advice. And more importantly, click that little subscribe button and the little notification bell button. It's really important you do both because YouTube, they're doing a lot of crazy shenanigans recently. Right now, it really helps this channel if you click that because it makes YouTube aware that we exist. So do it now if you haven't done so already. So let's start off with the markets first. And the markets really reflect the kind of two huge forces at play right now. So over the past week or so, we had these huge pushes up, huge pumps for the price of Bitcoin, all the way almost breaking 8,400. So a lot of bullish momentum and it was looking positive. Today we have a pullback, so we're being pulled down below 8,000 and we just couldn't break through. So people were looking at 8,400 and 8,500 as key resistance points, and we just couldn't break through that, and now we're being pulled back down. Now, there's two major reasons that I've gathered to be the bull reasons and the bear reasons. I'll start off with bear reasons first because that always wakes people up, and that's Chinese New Year. But throughout the years, we've seen Chinese New Year as a net negative on cryptocurrency prices. So here I have a full chart of everything going on. I'm just going to switch it to a log chart so we can zoom out a little bit. So I marked down the dates of Chinese New Year for the past 4 years. And what you can see here is that there's always been a little bit of a dip right before Chinese New Year. So in January 2019, we dipped to almost the lowest tier of $3,300 for the price of Bitcoin. Just a little bit slump right before Chinese New Year. What's happening in 2018 is a lot more pronounced. Just right before Chinese New Year, we had this huge slide from almost 16K into that full bear market craze of 5,000. So yikes, that was very near Chinese New Year. And and the year before that, 2017, we also have this little mini dip from 1,200 to almost 700 right before Chinese New Year. So these are just like 2 or 3 weeks before Chinese New Year's, things just start going a little bit bad. And finally here we have 2016, which we saw a little bit. So traditionally for some reason, Chinese New Year has always been bad news for Bitcoin. Some people have attributed to the Chinese cashing out, giving gifts to their friends. Personally, what I think is that there are a lot of market makers in that scene, and there's maybe a lot of potential orders. And what happens is that during that time, the market becomes very brittle as market makers go off work. Large orders don't get filled, or if they do get filled, they have a drastic outcome on the market. Next part, I'll be very careful talking about because it relates to current politics and lives are at risk here. But when I was reading up here, I would say I was almost shocked, but I don't want to say that word because it's kind of almost expected, but I was probably more disappointed. It just seems like international politics is a huge farce right now, especially when it comes to this whole emotional side. Both politicians and the mainstream media, they're trying to evoke an emotional response to what's going on in the conflict between America and Iran and the Trump impeachment, followed by the US and China war. It just feels like international politics is It's almost like a really bad video game with really bad writing. But the sad part is it's happening in real life. So one of the direct consequences of this is that finances get frozen. So whether it's companies that have finances frozen due to political sanctions against various countries, or just outright robbery when a country is about to prepare to go to war, we know that the government will start confiscating assets to make preparations for that war. So people who do have money, they want to create or hold assets that cannot be confiscated and that can be used globally. And currently, that's only Bitcoin. Anything else in this world, fiat money, that's a joke. That's all controlled by the governments and the banks. Also gold, you can't really move that around. That's why Bitcoin has the most power, because there's a decentralized governance. And also, of course, the store value comes into play, as well as potentially governments can print money during this time to help with war efforts. So this is why there is this more push towards crypto right now, and a lot of the reasons attributing to this rise in crypto dominance right now, just at this current point, just because of that political uncertainty. And the last positive, as you can see, the huge clock behind me, the Bitcoin halving is coming. And this is an event that's going to happen in May 13th of this year. The halving is really important because it directly impacts the amount of Bitcoin produced per day. So currently right now, every block we're producing 12.5 coins. That's going to halve to 6.25. And if you look at it as inflation per day, so right now, because we have a total of Bitcoins generated per day at 1,800 with a value of $14 million, on May the 13th of this year, it's going to cut into half to 900. And the inflation per day, well, if you multiply that up, that's going to be half. Assuming, of course, the value of Bitcoin doesn't move. Now, a lot of people are probably going to say, yeah, this is already factored into the Bitcoin price right now. We already know that it's going to happen. It's been programmed ever since the start of Bitcoin. The argument here is that the general public is not as well aware of what's happening with the halving, and it's going to cause them to have a fear of missing out, or FOMO. And that's happened in the past. Okay, that might be a lot to take in, but in summary, in terms of what's causing short-term uncertainty is what's going to happen around Chinese New Year. Traditionally, that's being viewed as bad, but at the same time, we have this political uncertainty that's causing value to go into Bitcoin and to store values, and also the Bitcoin halving coming up soon. So kind of in that middle period right now where these two forces are playing out. Now, how do you deal with that? So here's my prediction as to what can happen soon. So in the time leading up to Chinese New Year, which is coming on Saturday the 25th of January, I see crypto prices potentially moving up. I don't really see it breaking out of this downward channel, depending on how you draw it, but it could go up to 8,500, maybe 9,000. Then it could move down. This is when all that negativity surrounding Chinese New Year, that's going to pop. That's going to happen. And because usually that happens a week before Chinese New Year, I mark this as the 23rd to 24th of January. But I know you don't take these exact dates too seriously. After Chinese New Year, I see that momentum for the Bitcoin halvening really pushing up the prices of Bitcoin. That's when we can break out of this downward channel and move potentially up to maybe 11K, probably to highs of 14K, probably. But of course, a lot of people tend to buy the rumor and sell the news, and this is what almost always happens in crypto. So once the halving actually does happen, and as we near that date, what I personally expect is that crypto prices will move down quite a bit during that period of time. Just right when the halvening happens, it's gonna seem like a no event because everything's going to be priced in the immediate weeks to maybe a month or two before. After that, I do see the market kind of stabilizing for the rest of the year. We've pretty much had that this year, and I don't expect huge changes to the prices of Bitcoin. So whether it lands on 10K, I'll put it as 10K here because I feel like that's a reasonable number. It could be 9K, but it's probably going to stagnate around this area because I don't see any other huge sparks as of now. So I don't see the halving bring back the complete bull market. I feel like it's going to kind of bring a wave of excitement, but it's not going to bring the entire entire kind of army that we've seen in 2017. The reasoning behind that is because the crash of 2017 is still very fresh in people's minds. And the matter of fact is, even though crypto has moved in 2-year cycles, bull markets every 2 years, I foresee that this cycle being a little bit longer because it has entered the mainstream so much. Before, crypto was still kind of an obscure topic, but because it got so much recognition in 2017 in that hype wave, I feel like it's going to take a longer time for us to kind of figure out the real value, kind of that accumulation time to really pick up. And that's why I see the rest of 2020 as a generally calm time. Now, I'd love to hear your feedback on this. It is going to be quite controversial because obviously, I'd love to draw big arrows like that and say, oh my God, the bull wave's coming, guys. But honestly, I feel like this is much more realistic as to a prediction of what's going to happen in the rest of this year. Even though it's not the most bullish news, what I'm going to say is that having a realistic kind of expectation is good, especially when it comes to crypto. Next up is my current investment strategy and a breakdown of what I'm currently doing. So, to be honest, I wanted to show you guys this for a long time. The biggest thing that was holding me back was the way portfolios are presented in social media, etc. I feel like a lot of people were just flaunting their wealth, which is not great, and also kind of promoting the idea that, oh, just follow me and trade and you can make bucket loads of money. And honestly, I feel like that's the worst way to bring people into crypto, just by the sheer amount of greed, because eventually they're going to get disappointed when they find out that they don't become millionaires overnight, which I don't know who believes that. But anyways, what I'm comfortable and happy showing you guys is my strategy going forward and my overall portfolio in terms of percentages. So that kind of removes the immediate financial element from it, the greed element, of course, and it also gives you a little bit of insight into my philosophy. So I'll start off by explaining what's happening in this pie chart here. We have this little sliver, that little blue sliver here that Google Sheets did not label, and that's my leverage trading account. Barely existent is pretty much how we should describe it. And the reasoning for that is I don't feel like I need to leverage. It's extremely easy to go 20x, 50x, and just straight up gamble in crypto. And that's not what I'm here for. I'm here to win. I'm not here to gamble and try to win overnight and potentially lose stuff. I want to win. For me, wealth accumulation is much more important than straight up gambling. We also have gold. So gold taking up less than 1% of my portfolio, I actually feel like that's not great. I'm looking to increase gold holdings over time because it's it's a physical asset, and there's no reason why not to diversify more. I also have the biggest discussion point here is a 13.2% trading fund. So the way I do it is I don't leave all my money on exchanges. I've talked about how I use exchanges and I try not to leave assets on exchanges. But that being said, recently my trading has been quite successful. I think I've been extraordinarily blessed to have kind of a good general understanding of what's happening last year, and that has led to some really good trades. So what was a 6 to 8% trading fund, that's been blossoming to a 13.2%. Now, next up, HODL. HODL is kind of accumulation of Bitcoin, Ethereum, VeChain, everything staked like Zcoin. HODL is something I don't touch. They're in offline cold storage. They're out of the house. I don't touch that ever. And there's a reason for that, because at the end of the day, I don't trust my funds on exchanges, and putting them somewhere else is much safer. And also, I've learned from my mistake in 2012 where I just didn't HODL properly. So yet again, having a HODL fund means that this account is offline. I don't touch it, don't intend to touch it, and it's kind of out of sight, out of mind, and that's great for me. So that's at 38% of my portfolio right now. Then finally, we got other assets. So this includes fiat. I think it's so weird that people in crypto feel like fiat's a dirty word. But at the end of the day, realistically, I need to hold fiat to make sure that I actually live, I can travel, I can be financially independent, and kind of afford the things I want. So fiat, real estate, just a little bit of it, dabbling in that market a little bit, because I feel like diversity was kind of my key goals of last year, to make sure that I'm not kind of all into crypto, so to speak, just being, I hate to use this word, responsible. It makes me sound really old and just like boring, but yeah, that word. And then a little bit in the stock market as well. So that is it. That's my breakdown of what I have. This is the first time showing you guys this. I hope you guys have some cool comments. I mean, inevitably, I hope to learn something from this personally, and also give you guys some insight into what and how, how I work, how I function. Hope this is insightful. Leave a comment down below what you think of my portfolio, whether it is too much into crypto, too little into crypto. I'd love to hear your comments as to what's going on, and also your comments as to the prediction as well. Lots of things to comment about in this episode, and I hope to catch up and read up on the comments of what you guys say and have a discussion with you guys. I think this is something that's I really want to go forward with. And finally, guys, I found out there's something cool which is in Brave right now, which is crypto wallets. So it's kind of dedicated crypto wallet management, something that I've been looking forward in Brave for the longest amount of time. So you can kind of just click buttons and spend crypto online. So if you guys haven't tried out Brave browser, it's a browser that inbuilt blocks out ads. It's something that I've been using on this channel for the longest amount of time. Everything I show you here is on a Brave browser. And more importantly, it blocks tracking as well. So essentially, internet giants can't track and spy on you, which is mandatory at this point. If you guys haven't checked it out yet, download from the link below. Thank you guys so much for watching. See you next time.